Okay, sorry. Good morning once again, ladies and gentlemen. Everybody, I'm happy to see you. I just discovered that the video has not been recording. I think I have to start afresh because I want everybody who has missed, who does not have the opportunity to be here to rewatch this video so that we can all learn from the training of today. So what I was talking about is about the trade that we have going. Most of us are in the trade. We bought, we made a lot of profits. Uh, those of you who had the opportunity of buying this market, I believe you are in profit. So we are going to be talking about strategy, why I bought this market. It's very important because one thing is to send you signal. Another thing is to tell you the reason why the signal was sent. That is very, very important. So now let me go back to my 1 day time frame. The reason why I bought. And this class is going to be brief because the network is not giving me, is not friendly with me. And then we have, okay. So let me just go straight to the point. Look at this trade. Look at this trade. Look at this trade. This is volatility index 75. Look at the turning points here. It turned from here. It turned from here. And look at this up here. It turned from here. It turned from here. So the market has locked. It has been locked between these two zones. And I tell you that these zones are very, very important. If you want to trade professionally, you have to learn to draw these zones correctly. There are so many people who draw zones, but only few people knows how to draw zones correctly. So your success in this business is to learn to draw these zones correctly. So now this is the 1 day candlestick. Like I told you, you have to use the upper daily time frame to know the direction of the market first. But what amateurs tend to do, they look at smaller time frames and they make their trading decisions with smaller time frame. But that is the wrong way of trading. If you want to make profit in this business, you have to look at a higher time frame perspective and judge the market based on the higher time frame perspective. So if you come down to, now I have seen the movement of the market, it appears that the market is about to turn as usual, but that's how it has been doing over the time. So I have seen the direction of the market. Now I have to come close to a smaller time frame. Now look at where I entered. This particular green line was my entering point. Now, why did I enter? I saw this market was coming down, coming down, coming down. Then it went up. Yesterday class in the morning, remember, we wanted to buy. Some people said buy, 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 buy. I said, wait, let's not buy. It's too high. Let us come, let the price give us a better price. So I said in the morning that this market will do pullback. I don't know if some of you remember, but I was saying this market will give us a pullback down here. And look at the pullback. The market indeed made a pullback. After this pullback, this is the confirmation candlestick, this particular green candlestick. After this candlestick forms, I now had to be convinced that the market is to go up. So I ask you, I sent a signal on the group that we should buy. And if you draw your trend line with this 1 hour candlestick, you can see that it's actually going to respect. Okay, it's not really, it has not been a pronounced uptrend, but it's the beginning of an uptrend. Based on 1 hour, it is not really pronounced, but I made my trading decision based on this particular pullback, and you can see that the market has moved. Look at where I entered, and for this trade, the profit is, I've already closed 2 of my accounts. I've already closed 2 positions. If my profit got to $800 in the night, I've already closed 2 of my positions, and now what I'm seeing here is $273. I pulled out because of this pullback again. You can see that there is a trend line. Look at the trend line I drew earlier, and look at how the market is respecting this trend line. So the market broke through the trend line. It broke through the trend line, but I didn't. But what we're expecting now, what will happen now, you can see that the market is respecting this trend line. Look at, here it respected the trend line, here it broke through the trend line, but now since the market now went up a little bit and came back to respect the trend line. So now what am I going to do right now? I'm going to wait. I am not going to place a buy yet. Right? It's going to do this the way it did, like it's going to do this, or the way it did here, this, when it was coming down. So now all of us, we are going to be watching this trend line. Once I see an indication, maybe a bullish candlestick, once I see a candlestick, I'm going to make it very light green. Okay. Okay, once I see something like this print on this trend line, I am going to place a buy. This is basically what I am looking for right now. After, as the market has done this, if the price do this, I am going to place a buy. Can you see the logic? Are you clear? Can you guys see what I'm doing? Please, if you understand what I'm trying to say, type yes. If you understand what I'm doing, please, can you type yes? Okay, Austin said yes. Okay, Austin. All right, appear me, you're not understanding. Okay. Victor said yes. Okay. Okay, what am I trying to say here? I said the reason why I made this trading decision was because of this. I use the daily time frame to see the direction of the market. Now, I noticed that market has been turning from this zone. This place is a mountain where market has been turning. Look at first touch, it came down. Second touch, it came down. Third touch, it came down. This is the third down touch. Market has lost. It has been doing consolidation between these two zones, and people have been making hell money. These two zones have made so many people rich. All the trades you see me posting is from these two zones, making money from these two zones. And the key to make money from these two zones is to know when to enter and know when to get out. Otherwise, you can also lose your money. So how do you know now that you have seen the confirmation that it is about to go up? The daily time frame has given me a proof that the market is about to turn as usual to the upside. Now I bring down my time frame to 1 hour. As I brought it down to 1 hour, look at what happened. Market moved. That yesterday, while we are training in the yesterday morning class, it moved to this direction. But after that movement, market now came down. I told the people not to buy. I said it was too high. Let's wait for a pullback. I don't know if you guys still remember. I said let's wait for a pullback before we buy. Market actually came down again. All right. Then it now made this particular movement. This green line you're seeing is the candle, is the place I bought. That is why you're seeing that green line. So now, price, this was my confirmation candlestick. After this candlestick print like this, it gives me an impression that market wants to move. So whenever you see this kind of movement, if it's an uptrend, market will go what we call higher high, right, and higher higher low. This is a higher low. Look at the first low. This is the first low. Why this is the higher low? This is the higher high. This is the second high. This is an uptrend forming higher high, higher low. This is the first high. This is the second high. This high is higher than this high. This low is lower than this low is higher than this low. Look at it. Higher high. This is higher high. All right. This is higher low. So now, if price, now look at my trend line. This is my trend line, and the price partially broke through my trend line. So what I'm waiting for right now is a confirmation again. If I see a candlestick print like this, I will place a buy, and I will tell all of you guys to place a buy. It will give us profit to the downtrend, to the upside. So let us watch for this candlestick to form. Once this candlestick is formed, once it gives us a green candlestick like this, it means that we are all going to buy. So those of you who want to buy pullback, this is what we call retracement or pullback in market. Trading the pullback. This is what it means by trading pullback. Are we following now? So you have to learn to draw trend line like this. All right, you can draw trend line. We trade based on price action. We don't have anything. We don't have anything to do with indicators and all that. We are seeing the price in the market that we can place a trade immediately and go in. That is how we trade. Okay. All right, somebody said let's move to currency pair. Okay. Let's look at the currency pairs. Which one do we have to talk about this morning? There's one thing I'm going to discuss this morning. It is called Fibonacci retracement. Fibonacci retracement, we use it as price action traders. We use Fibonacci retracement to identify the movement of the price. So how do you plug your Fibonacci retracement? Very simple. If you want to know, and you use Fibonacci retracement when market is trending up or down. This battery is not plugged. Okay. You plug Fibonacci retracement to identify the strength of the pullback. So as a naked trader, the tools we use Fibonacci retracement to identify if a pullback is due for an up movement or a pullback is due for a down movement. So how do you plug it? Somebody said, is that Hakim Ashi? I don't understand that, please. How do you plug your Fibonacci retracement? Let's assume that this is a downtrend. This is a downtrend, all right? Market starts from here, market move from here. So this is a downtrend. So what you do, you just click, look at it here, draw Fibonacci retracement. You click here, you put it here on the beginning of the downtrend, then you drag it. You drag it to the place, the end, the place where it starts pulling back. Once you plug this retracement, plug this Fibonacci retracement around, you can see there are numbers. We have 23.6, we have 38.2, we have 50 points, we have 61 points. Now, if a market is on a downtrend, that you have confirmed that the market is on a downtrend, once you plug your Fibonacci retracement like this, it will retrace. The market will retrace to these numbers. If the market retraces to 38.2, before started coming down, it means that the downtrend will continue. Market may likely, if it is a confirmed downtrend that is still downtrending, it will respect this 38 retracement. It will get to this 38.2, and then it will likely turn from this place. So what traders do, most traders, they do wait as this market is now with this chart I'm drawing, but it is good to use a higher time frame to draw your Fibonacci retracement. Don't use 15 minutes, 30 minutes to draw it. Use a higher time frame like 1 hour or 4 hours to draw your trend, to know the determination of the trend. Now, once you know that if a market is trending, you plug it from the beginning of the trend to the last point where the market started turning back. So by the time the market do a retracement, let's assume right now that the market is doing a retracement right now. All right. So you'll be watching out for these numbers. You will plug it on your chart like this and be watching. If price touches 38, you don't see a candlestick like this. Let me show you something now. All right. Now you don't just enter a trade because it has retraced to, you don't just place a sell because it has retraced to 38%. You, by the time market touches this place, most likely, if the downtrend is this strong, it will turn from this 38.2 number. So as it touches this place and give you a bearish candlestick like this, you can place your sell after the formation of that candlestick. This one, it means that the market is likely to turn from here. This is a very valid turning point. But if the market did not retrace on the 38.2 retracement numbers, if it gets to 50, that means the market has started either reversing. You have to be very careful. If you are selling, this is a clear indication that the market may likely turn from here. It's becoming a reversal, not a mere pullback or retracement. Once you get to 60, the market has turned a direction. So traders use Fibonacci retracement to determine the level of pullback so they can re-enter for a sell. If you are selling and the market turns from here and then you plug it, once it started turning, you plug it, then you watch out for the retracement. Once, if it is 28, 23.6, you can still comfortably say, I'm very sure this market is still retracing. It will go back to the downtrend. If it is 38, you can still be very sure that if it gets here, it will turn. But once it crosses 38.2, getting to 50, it is time for you to say something else is happening. If you are selling, you have to start quitting your sales and think of buying because the market may likely turn from there to the upside. So this is how you can plug Fibonacci retracement to your trading. We use it. Naked traders use Fibonacci retracement to identify pullback and to identify trade reversals. So that is for Fibonacci retracement. Let's look at one currency pair this morning. And let's look at Euro USD, our favorite currency pair. My network is very, very slow here. Okay. Okay, let's look at our favorite Euro USD. Euro USD. This is trading view. Okay, Euro USD. Euro USD is going to be a buy. I yesterday I was buying, but I exited the market. But today, Euro USD is going to be a buy because of this. It broke through this zone, and yes, Akko, I saw the GBB CHF. We are going to open it now. Okay, you said you're already in profit. Okay, we are going to see it again. So Euro USD is going to be a buy. Look at what I'm seeing. There was a pullback here, but this candle is going to close. So we are going to look at the market. London market is open right now. So, but before we buy, we are going to look at this calendar to see what is going to happen in the market today. There's going to be a news. So let's look at our favorite, our friend, the forest calendar to see what happens. All right, today is Wednesday. Today is Tuesday. We don't have any news, so we can do anything we want to do with the Euro USD now. Right? I'm going to buy this currency pair. Then before we do that, we can also check out. So let's expect something. Let's expect this. Let's just expect this. It's still. Let's still expect this. If you are aggressive now, if you are aggressive, you can buy this. You can buy this trade, especially this London session. You can buy this market after the end of this particular candlestick. Today, this is. Let me look at. Let me look at this particular. This is 7 o'clock candlestick. Usually it's going to end by, I think, 10 o'clock. Now, after this candlestick finished forming, if you are aggressive, you can buy it. But if you are very conservative, you can allow it to do this. All right. If you are conservative, you can allow it to do this. Then come in. If you are conservative, you can allow it to do this. Boom, take your profit on this zone, near the zone. But if you're aggressive like me, sometimes you can buy this market after the formation of this candlestick. All right, so this is what we are seeing for Euro USD for this morning. Let's look at, somebody said, Akko, are you selling GBP CHF, or you're buying? Please let us know. Let me look at the chart. If you are trading any currency pair, send your currency pair so we can look at it. Can you look at EU and GU? Euro, please. Ike, is it Euro GBP or Euro what? Can you call the? What would you like? Are you selling or what? Buying Akko. Let's look at Euro CHF, Euro Swiss franc. Okay, USD, Euro USD and GBP. Okay, we just analyze Euro USD now. Okay, this was the pair I analyzed yesterday. This is Euro CHF. It seems to be. I believe you're buying. GBP CHF. Okay. Okay, GBP CHF. All right. GBP CHF. This was what. So are you buying or you are selling? What are you doing right now? Well, this seems to be, if you are buying, I will advise you take your profit now. If you're in profit already, I will advise you take your profit now. Then let me show you what you can do. Well, this is a zone. Look at it. Let me show you that it's a zone before I go to the analysis. Look at this. This is a zone. It has been touching here. It can turn from here. But with this multiple touches, it may break through the zone. This seems to be a zone. Look at it here. Market went up, came back here to retest. This is a resist. Here it was. Here it is now resistant, but this place it is like a support. Let's go further again. Look at one touch again. Clean touch of support. Clean touch of support. Seeing clean touch of resistance. Clean touch of resistance. This was a fake out. Clean touch of resistance. So now we have confirmed that this is a zone. So if you are buying on a zone. It's very dangerous. It's very, very dangerous. So what you could do now is to allow the market to do this. Break through this zone. Break through it. Do this. And then do this. Then you are in a buy. Now you are going to place a buy when you see a candlestick that is showing you the market is going to turn. Maybe you can bring down your time frame to a smaller one. You can see consolidation. Look at when you come back to a smaller one. Look at all this ranging consolidation that is going on here. Look at it. Ranging. So you cannot be buying this kind of ranging market. You have to quit the market now. It doesn't make sense to be trading at this moment. You cannot sell, you cannot buy, just stand by. Can you see how, if you go to 4 hours, the same thing you're seeing? This is a place where it's a dead zone. Get out of the market now. Look at how it is. It is a ranging market, and you don't trade money. You can lose your money in a ranging market like this. So I will advise that you get out of the market first for now, and then you wait for this to happen. You wait for this to happen before you can start buying again. So let's look at GBP USD. I've just analyzed Euro USD. Let me show you again if you are not following up. The Euro USD was okay. Euro USD is on a buy. I'm also buying this market, but I exited the market at this zone because zones are very critical areas. Market can turn around in the opposite direction. So I'm expecting this market to, if you're aggressive, you can take this trade after this 4-hour candlestick formation. But if you are conservative, you can allow it to do this, go up, let it come back and retest. This is what we call a retest of the zone, because this zone is a strong zone. If you look open to your higher time frame, if you go through it, you know that it's a zone. Market price has been respecting this zone. Look at the touches. So On a zone like this, we have to be very, very careful. So allow this to happen, or you can place a buy after the formation of this. Uh, this is very, very aggressive, but it pays. It pays. Put your stop loss down below. Put your stop loss down here, so it can give you profit. Or you allow it to do this. Go up and then come here and retest this particular zone. Then gives you, can reduce your time frame to maybe 1 hour, so you can have an early entry. It gives you an indication, a bullish candlestick formation. Then you can now continue with your buy. So I'm saying, okay, I am on a buy in. Okay, somebody said gold. Is this still valid? Okay, let's look at gold. SAUUSD. Okay, on a buy, gold. Let's look at it from the higher time frame perspective. You are buying gold. Let's see what is this. Let's see what is this. Okay, let's see what is this. Okay. Let's check what is happening to this. Let's see what is this zone. This seems to be a zone. Look at one touch. Look at the touch. Let's see what is happening. You can, if you are not clear about your zones, you can use a line chart. Line chart will give you, let's use 1 week time frame to confirm this zone with a line chart. To confirm your zone, you can use a line chart. The line chart only shows you closing price. So let's look at this line chart with a 1 week time frame to know whether that place is a zone. You can see the way I'm going back. You can go back as much as 10 years to find out if that place is a valid zone. Let me come down. With this, what I'm saying is an uptrend trying to go back again to the upside. So we can say this buy is still based on the 1 hour, 1 day time frame. You're buying right now, and your buy may still be valid because let's look at the lower time frame. But price seems to be doing range in here. Price seems to be, let's check with our lower time frame to check the minor zones. You see, you can change time frame to check. There are minor zones and there are major zones. This seems to be a minor zone, which is if you are buying this market based on what I'm seeing with this 4-hour candles chart, you may just hold on for your buy, allow it to break because this, look at the touch here. Let's go down to 1 hour. Let's see something. If you are buying, I think this market is trying to turn from here. If you're buying, I don't think you should continue buying your market right now, because look at what happened here with the 2 hours time frame. It went up here, touched this line. You see, you use different time frame to analyze market. After you have seen it from the higher time frame, you can now use all the other lower time frame to see the view of the market. Look at the higher time frame, which is 1 day, tells us that you can see touch is already touching a zone. It seems to be a market that is coming down. It started from here, it went up here, it came up, it came down from here. This is the touch. You can see the touch. It came down to touch this zone. It went up here, it broke through the zone. This seems to be a downtrend. Instead of you to buy, you should be thinking of selling this market. Instead of you to buy, this market is telling you that it's a sell. Look at it now. It's clear. Look at the massive candlestick. This one was a massive candlestick. This was a minor pullback. Look at the trend is strong on the downside. On a daily time frame, it's strong. Very strong, you can see. So you can't be buying this market at this moment. The downside is weak. Look at Phil. Always look at the left. The formation of the candlestick. How do they look like on the higher time frame? Look at how massive these candles are. Very big. And look at this up movement. This up movement is slow. This slow movement shows that the market is weak on the upside. That is what it means. So if you are seeing this kind of gigantic, powerful red candlestick coming downward, then you are seeing this particular small movement. You don't have to follow this one. This is a weak movement. So think about selling this market. Mr. Hyde, look at the smaller time frame too. It's telling you, smaller time frame, look at what happened. It went up, it came down, it went up. Now this is what they call double top. This is what we call pure double top. I will sell this market after this candlestick, this particular 4-hour candlestick finished and forming and gives me a clear direction. I will sell and take my profit here. You're not buying this market right now. All right? Mr. Hyde, do you understand right now? The only time you can decide to buy this market is when the market do this, maybe breakthrough here. The breakthrough here. If you are buying now, exit your buy and think of sell instead. Come do like this to retest this zone because it is a clear zone. And then move up like this. Now, if you want to use Fibonacci retracement to monitor this movement, look at let's see what Fibonacci will tell us. Let's see what Fibonacci will tell us. You can let us plug Fibonacci and see what Fibonacci will tell us now. Because this seems to be a downtrend for me. I'm going to plug my Fibonacci. This is where I started, right? I'll drop it down to the retracement. You see what Fibonacci is showing you? Fibonacci is showing you from 38.2. This is the 38.2, and the market started turning from that point. See how Fibonacci helps you to show you the turning point, the resistance or the support zones. Look at market. Fibonacci also is telling you that this is just a mere pullback for a downtrend, and the pullback is, when you look at the daily time frame, the up movement is getting weak. Look at the movement of the down, very powerful, and the up movement is very, very weak. So this movement has showed you that the market is about to turn. Fibonacci is not lying. Look at what Fibonacci is showing you. That this is just a mere pullback, and it is turning from the 38.2. That is the valid Fibonacci retracement numbers. So you better think of selling this market, not buying for that. Okay. Like I told you, today we are going to be very, very, very brief. Class, please, I want to appeal something to you. I want to appeal something to you. This is a very passionate appeal. Tomorrow, I told you that I'll be traveling to Abuja. So I want to appeal that you give me time to prepare myself in the morning, because even if I'll be traveling in the afternoon, but I have to run around in town before I travel. So our usual 7 o'clock training for tomorrow, 7:30 a.m. may not be very convenient for me. So I want to appeal. I'll be with you even as I'm traveling. I'll be checking my chat, of course, with my smartphone. If there is any trade setup, we can always take a trade together, but we may not have this class for tomorrow. I will continue with the basic student on Thursday when I get to Abuja. Please, it's just very a passionate appeal I'm making right now. Those of you who are in Abuja, you can catch up with me. We can continue one-on-one to see ourselves. I appreciate you guys. All right, let's look at volatility index. Thank you. No. It should be. Let's see volatility index. Okay, volatility index. Thank you. Oh, send the video, of course. This video will be posted, of course. Let's see our volatility. What is happening to our volatility? Let us remove. Okay, Blessed, you have a question. Okay. Okay. Okay, life class in PhD. I don't know. For now, I don't know we'll have life class in PhD, but when I come up from Abuja, we will have classes in PhD. I think this volatility index is giving us, it appears market has started moving upward. Let's see with our, we can buy this volatility index now. We can buy it now. I'm placing a buy. In fact, if you're not buying me, I'm buying right now. That's the confirmation. We are going to buy that market now. So you guys can place a buy. But I beg you, if you are trading volatility, use a very low loss side, of course, 0.01, and be careful of the position you're taking. Don't take more than what you can afford to lose, because the market can come back. We are going to place our stop loss down here. It's a very tight stop loss, but those of you who have big account, you can even put a stop loss down here. That's a big account. So I'm going to place a buy for this particular pair right now. That is 75. So it's a buy. You're going to buy. You may take your first take profit here. So take profit one. Let's take profit one. Take profit one. Let us take from this turn, the place I turned earlier before. Let's take it from there. Let's say, I think I'm going to post it on the group, so other people who are not here can also benefit from this particular signal. That's a confirmation candlestick. Which candlestick is that, sir? Now is one. This is 1 hour. Let me remove this Fibonacci of 18. It's making the whole chart to be looking as if we are using indicators. Why we are not using indicators? I'm not a fan of This MT5, I like trading view. This one is summer. Okay, where is this line? Okay, Fibonacci is out. Mr. Fibonacci is out. So we are placing this buy. This is the confirmation candlestick. This is the confirmation candlestick. We are buying it. You can see the market is moving up. I hope you are placing a buy. You are placing, right? All right. So we are going to take our profit here, possibly here. First take profit. That is, you can write it down. The number is 307756. That is all right. We are taking our profit at three, three, no, 56.33. That is take profit one. If you still have mind to, if you have good capital, if you have account that can carry the second trade, you can take your second take profit here, this zone. Take profit two, but I don't want to post that thing because people may, in case the market go against us, because we are only predicting sometimes. And I want to remind us of one thing: don't expect that every time you place a trade, the trade will go in your favor. Learn to bear losses. That is the key to success in trading. Whenever trade go against you, you have to bear that loss and don't be angry with yourself or with the signal that was sent to you, because we are not the market. The market can go against us sometimes. So should be used to lose it. Sometimes it may go, the market may go against you. All right. So we have taken our profits. This is the second take profit. The first one here. The second one. The second one here. Okay. The market is giving us profit like crazy. Like crazy, man. You see how easy you identify market with your eyes, not like indicator. Indicator will be telling you to enter maybe 3 hours time or 1 hour time. But with price action, you see the market, you enter. Take profit two. Take profit two could be 3, 1, 1, 5, 6, 6.70. Stop loss should stop loss. We can put our stop loss here. Though it's tight, let's put it here so that those of you who don't have big account, you can, because if you have good account, you can put it down. If you have good account, you can put it down here, because this seems market can be very, very aggressive sometimes, but it's quite far because we are pushing this market down, up. But since we don't have much to lose, let's just manage here. So in case the market do something, you can get out as soon as possible before it take you out completely and your money is gone. So you're willing to lose only this 299566 point. 07 2995 2995 36.07. Okay, stop. All right. Okay, Blessed, you said you wanted to ask some question or a question. Let me unmute you so you can ask a question. Oh, let us. Will I really have demos like FS? It does, of course. Please send FS3 to enter. Please send FS3 to enter. Some of us are not in volatility index. Okay, we have analyzed FS signal, FS trade. If there's a trade signal, of course, it will be sent to the group. Can I use my demo account to place the trade? Of course, you can. Okay, let me hear from Blessed. Okay, Blessed, you said you wanted to hear, ask a question, so let's hear from you.
Hello, good morning.
Oh yeah, good morning.
Yes, sir. Luckily, I was able to tune up on from the lecture this morning.
Okay.
Yeah. When you're analyzing, I actually followed it critically on your analysis. But the thing is that sometimes we need to know whether it's volatility index. If not, that I saw those figures, those price points. That was now I noticed it is volatility index. I'm not yet on volatility index to not had lectures on that. So in case of signals, one may not know. A signal may just come up, and one try to when you send the signal, one will assume that the signal is for normal trade. Probably when you get there, you won't see those figures.
Okay, maybe you came late or you were not really understanding what I was doing. What I was doing, first of all, I analyzed I was on volatility first before I switched to forex. Then later, and I came back and I said, let us see our volatility index. So even when I post a signal on the group, I will usually post it as volatility
platform
75. I usually indicate whether it is a currency pair or it is a volatility index.
Okay. Then secondly, hello?
Okay.
In price action analysis, I noticed that you made use of different time frame. Sometimes you use a week, even a day, sometimes 4 hours, 2 hours, and all that to do your analysis to arrive at a specification where you believe that at this point, it's either one should just buy or one should not buy at all, or one should sell. I think I would also like to know things to look out for when you are making those analysis. Different times, or maybe you list it out and post it on for us on group, so that before one will conclude to place a trade, you should have factored the following: check it on a day basis, check it on weekly basis, check it on 4 hours basis, check it on 1 hour basis before making a decision. I think that will also help us too, especially with the beginners.
Okay, it's very, very noted. That's why you're attending this class, because you can see that the reason why you're attending is to know how I'm analyzing the trade. So if you are seeing me changing from time frame to time frame, it means that is the real way to go. You have to check it from the higher time frame, know the movement of the price. The higher time frame gives you a better direction. It tells you the real where the market is going to. Then after that, you can now use the lower time frame to entries and also some confirmations.
Okay.
From the lower time frame aspect, but higher time frame gives you a direction, clear direction, and you follow the higher time frame, because what moves this market is the banks and other financial institutions. And these big boys, they don't use the lower time frame; they use time frame like 1 day and upward. So you don't have to go and be using those small time frames that we retail traders usually use 1 hour and 30 minutes. So use those big time frames like the big boys.
Okay.
All right.
Yeah, when you're coming to Abuja, how do we meet?
Usually I'll be in Transcorp building, so you can always catch me up in Transcorp.
Okay. Okay.
Yeah. Okay, so it seems there's no other question. We can.
Do we trade? Do we trade? Hello.
Hello, yeah, I'm with you.
Okay. Do we trade the volatility index with the same MT4?
No, with MT5, there is a video on it that you can learn how to trade volatility. I think I posted it yesterday. Maybe because of your ask, I will post it again so you can set your volatility account with binary.com.
Okay. Okay.
Download the MT5 on Play Store.
Okay.
All right, thank you, Mr. Blessed. You can mute yourself, please, so we can hear other people.
All right. All right.
Thank you so much.
All right.
Somebody say, what of the entry points are? It's instant execution. Instant execution. So we are. All right, so I'm going to end this class at this moment. I want to encourage you guys to keep on reading your books. Yeah, you can download it on their computer. Once you have opened your account with married.com, you'll be allowed to, you will see a page that will allow you to download the MT5 chart. All right, I want to encourage you to keep on learning and commend you for your effort. So many people are watching television, they are watching the news, what is happening, whether somebody is going to be kidnapped or blaming Buhari for one thing or the other. But you're here with your MBs, learning a skill that will pay you for the rest of your life. This is what is worth doing. So most people think that the best thing is to go to school, have a good grade, and then they will have a good job. But that's the mindset of failures, poor people. But for you to be on this path, that means you have the mindset of the billionaires and millionaires. This is what they do. Success is just copy and paste. If you copy what the successful people are doing, you see how they make their money. If you do the same thing, you make the same money. So I'm so happy and excited that you guys have taken the path of self-development. So keep on doing what you're doing. Read books every single day. I wake up every morning. I woke up from 4 a.m. Maybe that time most people are sleeping. Before I came here for lectures, I've read my books, both on forex, both on mindset, because my mind has to be constantly motivated to do what I'm doing. So you have to do the same thing. If you want this business, if you want to become successful in this business, you have to learn to be a reader and make it a study. The difference between average traders and people who make money in the trading is commitment. Most people are interested, but they are not committed. If you're interested, you will attend class one day and you will not attend class the next 5 weeks or the next 3 days or the next 5 days. And you read book one page and you will not read again till next month. But if you are committed, you read these books every single day and you listen to watch any video or attend class every single day. I do this since the day I made a decision that I want to be a trader. This is what I have been doing. There is no day will pass that I have not studied forex for at least 1 hour. One of my mentors said, if you spend extra 1 hour every day learning any skill of your endeavor, you become a national expert in that field in 3 years, in 5 years or less. So instead of spending time in watching TV, engaging in things that does not have value every single day, use those times to invest in yourself, what you have said you want to do. Study it. Make it a study every single day. Books are posted every day. Read them. Discipline yourself. Don't be sleeping every day. Sleeping will make you lazy. Watching television will make you poor. My mentor said if you watch television every day, you end up being a broke man or a poor man at the end of your years. So form successful habits and read books. Listen to something positive every single day. Set this thing you're doing as a goal that look in the next, don't be in a hurry. Most of us want to make money now, now, now. That is not the best way to go about this business. Some of us just want signal. Give me signal, give me signal, give me signal. I want to make money. No. Find a way to learn the skill by yourself, to generate signal by yourself, to even give signal to people. Not just give a signal. I want to make money. I want to make money. My bank account. How much money can I make today? Can I make $50? Can I make $100 today? That is the wrong perspective about business or trading. Think of how you can learn this skill that will pay you forever, not just signal. Signal is like giving you food, but not teaching you how to make your own food or make your own money. So don't depend on signal. Depend on you learning the skill by yourself. That is why you have paid to learn. So learn it and stop worrying about signals and stop thinking about making quick money. Anything worthwhile in life takes time to develop. So find time to develop this skill so that in the next 5 years, some of you will be telling me thank you for meeting me. Which is going to happen? Trust me, if you follow my instructions, take my mentorship, do the things you're supposed to do, read the books you're supposed to read, and take the instructions that I've been giving you every single day. In 5 years from now, it might not be immediately like most people think. Most people want to get rich overnight. I don't believe in quick riches. I believe in long-term riches. So a few years from now, you'll be telling me and you say, thank you, sir, for changing my life. So please let us develop ourselves. All right. Thank you so much. Okay, Austin, thank you. You said you're already thanking me. Thank you, Austin. All right. Oh, thank you, Austin. You said you're the gift to the generations. Thank you, Austin. Thank you. I celebrate you. Thank you. All right. Thank you, Mr. John. I appreciate you. All right. Thank you so much, guys. Let us call this a day. Have a good day. We'll see you next week for the advanced student. Then for the basic student, we'll start tomorrow by, okay, we'll start on Thursday by 6 p.m. and Friday by 6 p.m. All right. Bye-bye. Thank you, Mr. Randy. God bless you too. There are boosts. I will send boosts, Emmanuel. Of course, you can join the advanced class. You can. Okay, books on price action. Of course, there are books, but read the ones you have first. Finish those ones. Emmanuel Odiri. All right, thank you, Oga Hike. Thank you, appreciate. All right, somebody, I'm working on them too. Oh, good. Please post on how to. Okay, I'll post it, of course. Today meeting is not for you, Mr. Albert. It's not for you. It's for people who are new that I usually introduce my weekly free trainings. It's not for paid members. Thank you, Blessed Okonko. Thank you, thank you. All right, bye. All right, Frank Live. Hope to see you too. Oh, thank you, Frank. Said my 1 week with you is amazing. Thank you, thank you. All right, bye bye.